conversation going specifically on the banking sector, given all the news flow. Manish Agarwalla, co-head of research at Phillip Capital, is with us and he tracks this sector in great detail. Manish, good morning. Good to have you on the show today. I just want to first start up with, how you're looking at the HDFC-HDFC Bank merger. In all probability, the announcements have all gone through. Our earlier guest was, for instance, saying that there is a bit of an arbitrage opportunity that can still be played. But how do you look at the combined entity, and what is your current call on the two individual stocks?
Yeah, hi, good morning. Thank you for having me on the show. The merger is one of the biggest in the corporate India history, and the experience of this merger and the regulatory guide path will become precedents for the future conversion of NBFC, large NBFC, into a bank. So we see the regulatory guide path very closely. We monitor that very closely. As far as the merged entity is concerned, HDFC Bank is expanding their deposit very aggressively. They are trying to be more reliant on retail deposit. At the same time, they are also trying to build up the priority sector requirement very aggressively. As a merged entity, obviously, because of the high pace, there can be some moderation in the growth going forward, unlike the way HDFC Bank used to grow in the past. If you look at between 2000 and 2009, the bank used to grow at a CAGR of 24-25%. Post-COVID, the growth has come down to somewhere around 18%. We foresee this growth on the combined basis to be between 14 to 15% going ahead in near term. Obviously, the moderation in the growth will have some bearing on the valuations of the merged entity, which we have already seen as of now. We are not expecting the merged entity to see the previous valuations, but at the same time, this will be one of the largest merger, and HDFC Bank will expand its footprint in terms of mortgages in other geographies, which Limited was not doing earlier. And that will also bring a lot of cross-sell opportunity. Having said that, I think we remain very positive in this name from medium to long-term perspective. But reiterating again, there is a cap on the valuation for the merged entity.
Sure. So when you say you're positive from a long-term perspective, right? This is what HDFC Bank is now at a little under 1,600 rupees. Once the merger goes through in its entirety and the stock as well reacts to what the merged entity growth parameters could look like, what do you see as the medium-term upside for the stock in terms of what's your price target?
So we see around, say, 15-20% upside in the medium term. So we have an official target price of 1,900 for the stock.
Manish, that's on the merger. Now, because of reasons absolutely not linked to Indian banks, there's a fire sale underway in the market, right? Indian banks have been beaten down black and blue, and it's so clear that there's absolutely no correlation whatsoever, and when we have our regulators to thank for that. So in this environment, are you advising a buy on any of the bank stocks? If yes, which are your top picks?
Yeah, obviously, we are positive on the sector. Despite very strong financial performance in last 2 to 3 quarters reported by most of the banks, the stock performance has not been in line because of various reasons, what you alluded, global sell-off, and so on and so forth. Going ahead, we remain very positive on the sector. We see a very strong credit cycle for the sector. Yes, there can be some moderation on the credit growth side because of the base effect, because of higher interest rate. Some of the retail segment might see some moderation. But having said that, I think the path looks quite strong, the growth path. At the same time, the credit cycle is very favorable. So the credit cost for the sector as a whole, at least in the medium term, we don't see any spike there. We remain very positive on the sector. However, for next 1 year, deposit will take the center stage. So bank with a very strong deposit franchise will be in a position to support their margins. At the same time, any franchise which has got a pricing power, that should do well. That's our house call. So selectively, we like some of the top private bank like ICICI Bank in the large space, Axis Bank in the large space. Those are the two banks which we like at this point in time.
Okay.
In the mid-cap space, we continue to like Federal Bank, we continue to like Bandhan Bank.
So for ICICI Bank particularly, ever since Sandeep Bakshi has taken over, of course, the bank has, had a dream run, right? And now it's overtaken HDFC Bank as well in terms of margin performance, growth, etc. What kind of an upside do you see on the stock in the near term, and what could be the growth triggers?
We see similar upside between 20 to 25% for ICICI Bank as well in medium term. I think the growth trigger for iBank would be, their ability to surpass the systemic credit growth that will, help them to report a very strong top line. At the same time, as I mentioned, the challenge this year will be the deposit growth and the ability to, defend margins. With the higher share of retail deposit, I think is ICICI Bank in well positioned at least to defend their margin compared to other peers.
Okay, Manish, got that. Thank you very much for stopping by and giving us some perspective on bank stocks today. The pre-open is settled and the